Welcome to the Jay Kim Show. This is your host, Jay Kim. I am an investor, author, and fitness entrepreneur, and for the first time in Asia, I sit down with the world's most brilliant minds in business, investing, and entrepreneurship. You'll learn all the secrets, strategies, and formulas to becoming a successful entrepreneur directly from the masters. If this is your first time listening, thank you for stopping by. This podcast is produced every week with the goal of providing actionable insight to you, the listener, with every single episode. And now, on to the show. Today's guest is Tytus Michalski, managing partner of Fresco Capital, which is a global venture capital firm. Tytus has been investing, working, and living in Asia since 1999. Previously, he was the CIO of equities at PMA Investment Advisors, an institutional hedge fund. He launched this fund in 2002 and then sold it in 2006 for over $200 million US. So he knows a little thing or two about market timing. He's an active supporter of the startup ecosystem here in Hong Kong. And in today's episode, we talk about the problems that we face in the ecosystem here, and he offers some constructive solutions on how to improve. Tytus also talks about the due diligence process at Fresco Capital and what is involved in that before they make an investment into a company. I know you're going to enjoy the show. Let's jump right in. Okay, Tytus, thank you so much for joining us on the Entrepreneurship in Asia podcast. Really appreciate your time.
Happy to be here.
Okay, so let's get started. You are very well known within the ecosystem here in Hong Kong. You probably don't need an introduction locally, but for our listeners abroad in Southeast Asia and in the US, why don't you just introduce yourself? Who is Tytus Michalski? What do you do for a living?
Okay, sure. Happy to give you a little bit about my story. I was born in Poland, grew up in Canada, lived in London, Tokyo, Singapore, and then in Hong Kong. And when I came to Hong Kong, I thought I'd stay for 3 to 5 years. Mm-hmm. And now, 17 years later, I'm still here. So obviously it made an impression on me.
Wow.
Part of it was the fact that I could continue to think globally. And so it's been a place where we've started a couple of companies, including our current company, Fresco Capital, which is an early stage global VC. And so we have 3 managing partners. In addition to myself, we have Stephen Forte based in Menlo Park and Alison Baum based in Tokyo. And so the 3 of us spend a lot of time on airplanes, meeting each other, meeting our companies, and meeting with other partners.
Right. Okay. And so you're one of the founding partners of Fresco Capital, is that right?
Mm-hmm. Yep. We started through my angel investing and then scaled it up into a fund.
I see. Okay. And so before you founded Fresco Capital as a sort of early stage private equity type investor, you were a public markets investor. Is that right?
Yeah. So before Fresco, the previous company we started was a company called PMA. And that was with some other folks. We started that in 2002, and it was an institutional hedge fund, which we scaled to $3 billion in assets, and we actually sold the company in 2006. So we got lucky on the
good timing.
Yeah, and as part of that experience, I really enjoyed meeting with these very successful entrepreneurs who had, actually built companies to IPO. And traveling around the region and seeing how they started and scaled. The part which I was less excited about was the short-term time horizon of public markets. And even during my time, it just got shorter and shorter. And so that was the reason to focus really on venture capital and working with portfolio companies. One was to be able to work with entrepreneurs more to build their business, and 2 was because you could do that with a long-term time horizon.
Right. So then, you mentioned there was your sort of angel, your personal angel investment portfolio that you started after you sold PMA, and then you then scaled and built Fresco Capital around that portfolio?
Yeah, we started it like that. And, at this point, Fresco Capital is very much an institutional fund. So, when I started, it was early 2011, and then by 2012, we had turned it into a fund structure with external investors, and the other partners joined very soon after.
Got it. Okay. So how big is your team now at Fresco? You mentioned you had three managing partners in US, Tokyo, and in Hong Kong.
hmm Yeah, so we've got 8 people in total, and then we also have a network of folks we call impact partners, which help our portfolio companies. That they do everything from helping with coaching teams to business partnerships, and then finally, core to our model is working with strategic partners in our local countries. So some of these strategics are investors in our funds, and they value not only the fund itself as in terms of returns and money, but also the business opportunity, right? Because what's happened is a lot of these traditional businesses, they might be in business for over 100 years, and they realize that that traditional business is going to transform in the next 20 years, and they better figure out what's going on. So by investing in our fund and working with us, it's not only just the returns that they can get, but also the actual transformation of their business.
Okay, that makes sense. And how many companies, portfolio companies, do you guys have now?
So we're just under 50 companies,
Wow. Okay,
mostly
nice.
headquartered in the US, but
Hmm.
all with a very global cross border perspective. And so we typically are helping our US companies come to Asia
Mm.
across different countries. We also have companies headquartered in Asia that are going global, either within Asia or to other markets. And then finally, even in our portfolio, we have a number of companies that do have European offices as well. So we really do end up with a pretty global perspective.
Right. And is the reason why the majority of your companies sort of US based is because that's where the talent is, and that's where you see the opportunity from these guys when they're expanding globally. You can play a role in their global expansion into, say, China or Japan. Is that why that your portfolio is shaped up the way it has?
Yeah, it's I think it's tied back to the history of the startup ecosystems. And so our exposure has a pretty reasonable map to the maturity of the ecosystem. So the Bay Area is our biggest,
Mm.
and that's no surprise. New York is also a big one for us, and then it just becomes much more case by case of where we have a presence and where we don't. And then finally, the big swing factor is the cross border emphasis. So right now we have more companies based in the U.S. coming to Asia.
Hmm.
As the ecosystems in Asia become more mature over the next 10 years, over the long term, we definitely see more of our portfolio companies, being headquartered in Asia and going global. So we do think there's going to be a shift,
Right.
but we're just going to let the opportunity set decide the timing of that shift.
Right, right. Okay, so that's a good transition that you've brought up. So, talking about Asian ecosystems and particularly the ecosystem here in Hong Kong, I moved to Hong Kong in 2005, so probably a little bit after you, but I've been sort of following the scene less actively than you have. But why don't you can you explain to us exactly what has happened between when you first came here and you started angel investing versus now? I mean, there's obviously some improvement, but I feel like we have a long way to go. What have you sort of observed as someone that's a very active participant in the ecosystem here?
Yeah, so I think just like with other ecosystems, there's been a huge amount of progress in Hong Kong, and I would say that it really started to get accelerate in about 5, 6 years ago, and that's when things started to pick up again after the financial crisis, and then every year there's been improvement, and so you've got to start with the basics, and I think that's what's happened in Hong Kong. There was, the initial focus was on just building up awareness of what are some of the opportunities and getting people excited about entrepreneurship, and I think that's clearly in place in Hong Kong, especially among younger people.
Mm.
And then, the next stage is building out the infrastructure. So we've got co-working spaces, we've got now accelerators. So I think when I look at ecosystem building, ultimately, the number one most important thing is talent,
Hmm.
and that's a challenge everywhere. And that's a challenge even in the Bay Area, is making sure that startups are able to recruit the best talent and retain the best talent. And so that's a challenge for Hong Kong specifically, but I don't think that's unique. I think that's a challenge globally, and it's about being able to attract talent from traditional companies. It's also, the reality that a lot of the best talent in the world can choose where they go. I think Hong Kong's been fortunate that there's been a pretty interesting inflow of talent from other parts of the world, and that's been helpful for the ecosystem because that can accelerate the process. So to the extent that the Hong Kong can remain relatively open to bringing in talent, I think that's very positive.
So how much of a role does the government play in this? I'm good friends with, I'm sure you are, with all the people over at Invest HK and Start Me Up HK. Like, how much of a role have they played, and is there more that they can do to support the ecosystem, or is it more of, like you say, just talent that has to come to Hong Kong, or maybe Hong Kong just needs a big win, an Alibaba type startup that's homegrown that actually makes it to put it on the map?
Yeah, so I think there's a lot of things that everyone can do, and I think it's always tempting for people to say, "Oh, if only the government would fix this or fix that." I think there's a lot of things the government can do around social issues, and so from my perspective, when it comes to government resources, the question is who should the government help?
Right.
And so I think there's a short list of people that the government doesn't need to help. So let's start off with rich angel investors. I don't think the government of Hong Kong should be subsidizing angel investors with tax breaks. Right? Tax rates are not the problem in Hong Kong. So that, I don't think that's really an issue. I think there's a lot of social issues that the Hong Kong government should be more effective in addressing. But then when it comes to startups themselves, I'll again really come back to talent. I think talent is the key thing. In addition to the issue of allowing talent to come in, when it comes to homegrown talent, I think the government should be looking at things like life skills, education vouchers, right? So giving workers the vouchers to be able to go out and use them for education skills, whether it's at traditional universities or some of the private entrants, and basically let individuals decide how they want to use those vouchers. I think that's a really interesting opportunity that the government should be experimenting with. Whether they end up doing more on that, I don't know. But to me, that would be something that they could do specifically.
Interesting idea. I mean, I think one of the other challenges that when you talk about private funding, one of the challenges that I have seen and sort of observed is with the education and the sort of the mentality. So like the old money in Hong Kong has all been made basically off property. I mean, if you want to make it black and white, it's, and so Hong Kong investors, traditionally they're not educated and they don't know as much about early stage investing, I believe. They would no sooner go to, the stock market, the public equity market, or even Macau and gamble or buy an apartment than they would to invest in startups. So I think that, and as you said, in the last 5 years, I think this is obviously improved massively with the amount of co-working spaces and education that's out there available to the community. But one of the challenges that I saw early on was that none of the private investors actually wanted to. They weren't educated enough, and they thought that investing into a startup was just throwing your money away. And to be fair, as an angel investor, a lot of times it is. But if you really kind of study it and know what you're doing, you can probably have a higher chance of success as an investor, right?
Yeah. So I think the good news is in the last few years, there's a lot more people interested in investing in startups, and as you said, there's a lot of people in Hong Kong that do have money and maybe were in other areas, whether real estate or finance, and are now getting more involved in startups as investors. The challenge, from my perspective, sometimes is that the constraint on investing in startups is not money. The constraint is actually time, right? If people had the time, I think they could do it. But usually people don't have the time, and so if they're doing it as a hobby, I think that's where you run into some challenges. And to put it in perspective, for us as a fund, we look at more than 100 opportunities for every one investment that we make.
Wow!
Right, and so that's at least 99 times that we're saying no.
Right,
and then there's statistics out there about what does it take to to succeed is in early stage investing, and then the numbers are pretty clear. If you do less than 20 hours of due diligence, your average expected return is essentially 1x. So you could get your money back, which is not great. If you do 20 hours or more, your expected return is more than 5x. And so when you then say, even if you don't do that amount of due diligence on all 100 companies, even if it's some fraction, that's still a lot of time on just filtering deal flow. And then when it comes to early stage investing, one of the other key points is you need a diversified portfolio, right? So you shouldn't just be investing in one company,
right?
Probably at least 10, probably closer to 20 to 30. And so when you start to do that, and then the fact that you have to help the companies after you invest, suddenly you come to the conclusion that this should be a full-time job, right? Yeah. And that's essentially the conclusion. That was the learning process I went through. And I said, yeah, I'm really excited because I think there's a huge opportunity.
Wow.
So I think what we need is we do need more people that take it seriously, right? So people ask me, do you want more funds that are doing early stage investing? And I say yes. And that surprises people because they say, isn't that competition?
Right.
And I say, no, I'd rather have high quality investors who really know what they're doing. I think that's good for the ecosystem. But to the extent that people don't want to commit the time, then yes, they should be investing in supporting people that are. So investing in funds or in other structures where, those casual investors, they can still participate, but they also are appreciative of the time commitments. And as you said, if you're an early stage founder and you're working night and day and you're getting, these random emails from your investor that may not be as helpful, right? It's not necessarily going to support the business as much as somebody who's doing it full time.
Right. Yeah, absolutely. I mean, I haven't heard that metric before, the 20-hour metric, but when you put it in that context, let's say you're working a 40-hour week and you're devoting, let's say, 2 companies that you can look at per week. And so if you look at 100 companies, so every 50 days, you can make one investment. So you're making like five a year if you're a full-time, and you're doing your proper due diligence, right?
Mm-hmm. Yeah, it's not easy, right? I think that's what people don't realize. They think it's about money, but it's actually about time.
Very good, very interesting point. That's awesome. So okay, so let's dive into some of this now. Some of the stuff that probably a lot of our audience wants to hear. Okay, so when Fresco Capital looks to make their investments, what are they looking for specifically? What can a startup founder do, if anything, to increase his or her chances of being noticed by your team?
Yeah, so at the high level, we do advise founders to find the right investors for their company. And so for many situations, we're just not the right fit, right? So I think there's certain things that we focus on, and there's certain things we don't. So we're pretty transparent in the areas that we focus on. So education technology, digital health, and how technology is changing work. So when you look at those 3 areas, the thing that they all have in common is these are industries and opportunities where technology has had less of an impact in the last 15 years. Right? So if you think about it as a consumer, you have these amazing consumer apps and wonderful experiences, and then you go to the office and you work with usually pretty crappy software. Right? And similarly in healthcare and education, the overall experience for people working there and for the users is suboptimal to say the least. So those are the areas of opportunity that we're focused on. And so when it comes to people that are building, let's say, the next consumer social network, we're just not going to be a great fit. So I think that's the high level overview. And then on the specific process, we look at the team first. And of course, we have some specifics that we're looking for. But a lot of times what we're really focused on is the fit between the team and the product in the market, right? So we call it founder market fit.
Ah, nice.
Right? And so that's an important thing. And then, yes, there has to be sustainable business opportunity. And then finally, of course, we do look at the deal structure itself. So we go through a process, but we're able to go through it pretty quickly.
And you guys invest in, is it seed to A and then beyond, or is it just sort of on the Series A and beyond level?
We like to get involved early, so we can go as early even as pre-product, pre-revenue.
Okay.
But that's rare. And then at the latest we'll get involved in is at the Series A as a first check. So that's the range that we'll invest in. So it's pretty broad. Our sweet spot, however, is the classic seed stage, which is the company has a product, has some revenue, and it's built out something, but there are some questions or risks that remain, and that's certainly the area we tend to be most active in. So classic seed stage.
Right. Okay. Got it. And so listeners, first of all, make sure you're targeting the right. If you haven't started yet, make sure you're targeting one of those key areas that Fresco invests in. And then I love what you said about the founder market fit. That's a good little phrase there. So I think that's probably quite prevalent within a lot of the famous investors. I mean, the founder's personality versus the idea is much more important, especially if you're going to be in there, rolling up your sleeves at the seed stage, helping these guys gain traction and get to the next level, right? I want to talk about, you've been a public market equities investor. You've seen a lot of ups and downs in the market. You've seen bubbles and you've seen them pop. So how do you feel about the state of early stage investing right now? Are we in a bubble? Are we going to be in a bubble or not? Are we out of the woods?
Yeah, we're fortunate that we get to see what's going on in different markets in different parts of the world. And so I think a lot of emphasis is on what's going on in the Bay Area. And at the same time, there's other markets, whether it's China or even Japan, that have actually at some point seen higher valuations. And so those markets sometimes have been actually more cyclical. The good thing with the Bay Area is that there's a pretty mature market, and so while valuations can get excessive at the early stage, people have been through cycles, and so it's maybe not quite as extreme. Where I think there were more challenges was in late stage investing, right? So the pre-IPO growth stage investing area, and I think that area clearly got a little overheated and now is pulled back. At the early stage, for us, we just feel like ultimately investing through the cycle is the right way to go. And similarly with founders, building a business through the cycle is definitely the right strategy. And so in a market where capital is abundant, people think that's a great time, but what people forget about is that if everyone has money, then what that means is that your competitors are probably cutting prices aggressively, and there's this massive war for talent, right? So that's not actually good for companies. And then when the fundraising market is tough, people think that's negative, but the benefit is costs are down, employee availability and retention is much better, and when you're going to see customers, there's a lot less competition. So I think founders and investors that appreciate the upsides of softer fundraising markets are the ones that can really build large companies. And then on the flip side, when things are good, sometimes the danger is you don't want to believe your own hype, right? So don't get too caught up in all the stories and the awards.
Yeah.
So we try to stay away from that game and really focus on building sustainable businesses.
Yeah, that's great. I mean, that's good advice for startup founders. I mean, regardless of funding environment, I think the cream will always rise to the top, and the strongest will survive. And so if you can build a business in a soft environment, then that's pretty good. That's pretty good chops, right? So, okay, so let's talk about some of the companies in your portfolio. Are there maybe 3 companies that you're most excited about right now? I mean, obviously you're probably excited about all of them, all 50 or 40, what have you. But which one of the Hong Kong startups that you'd like to mention on this interview?
So there's a company called SnapT that we have where you can design a T-shirt on your phone in 30 seconds. And awesome. Beautiful designs. They got the obviously production process, and then also the global logistics. So what's fantastic about Hong Kong as a base for that is you can literally cover the world just out of Hong Kong.
Right.
The incremental update with them recently they've been working on offline experiences. And without giving too much away, because they are in some confidential discussions, essentially what it combines is some augmented reality with in-person experience, and then voila, that becomes your t-shirt.
Wow.
You can have that experience obviously saved, right? So you can get those experiences in a very dramatic form, not just sharing online. So that's pretty exciting for us.
Yeah.
Another one I'll highlight again because it's a little bit more of consumer and relevant for younger people is a company called Launch Pilots, which connects brands with university students, especially in Hong Kong.
Okay.
So what they do is there's a lot of university clubs that are looking for sponsorships and are obviously run by very busy students, right? So what the platform does is it helps connect them with these brands that are really interested in reaching out to students, but have no way to manage that relationship. And so it's great for the brands because they're building this relationship with university students, and at the same time for the students, they're not being exposed to advertising in a traditional way. It's much more of an authentic experience of you only engage with a brand that you're actually passionate about.
Is it free, like for the brand, or is it like
the brands pay for the advertising just like they would pay for any other kind of advertising experience?
Right.
But I think the difference is the level of engagement you get with the students. Right, because this is not just some banner ad flashing.
Yeah,
this is about students selecting. Yes, I want to support this brand.
Right. Got it. Okay, and what was the name of that company again?
It's called Launch Pilots.
Launch Pilots. Okay, yeah, we'll have it all in the show notes and linked up. Okay, so Tytus, thanks so much for your time. We're going to look to wrap up here. I just have two final questions for you. The first is, what is one final piece of actionable advice that you would give to an aspiring entrepreneur or startup founder in Hong Kong, in this ecosystem?
Yeah, so one of the favorite pieces of advice that I've heard is given by a guy named Felix Lam, who's also a local angel investor. And essentially it's start small, think big. Right. And I think this is something which is a bit of a paradox for a lot of young founders, especially. It's on the one hand, you do want to be ambitious, right? So you do want to have that change the world mentality and not just thinking about, I want to make a product just for Hong Kong.
Right.
But having said that, you don't start with that big vision. You have to start with something really, really small and show that works.
Right.
And so that there's an inherent tension between those two.
Right.
But as long as the founder is clear and understands that you can start really, really small with a very basic experiment, part-time, in a very low-cost way, and then you go step by step towards that big vision. Because I think a lot of founders do the opposite, and they end up trying to do 10 things at once and not doing any of them very well. And then even though they're ambitious, they haven't actually gone to this math, they don't have necessarily the long-term vision.
Right. That's very good advice. I mean, and it'll end up saving the founder a lot of time in the long run. It's kind of like the lean startup type thing where you just get the MVP out and start small and validate it in the market, right?
Yeah. But I think also the think big part is important too, because if you just start small and you don't have if you don't know where you're going, you'll get there, right?
Okay. Awesome. Thanks for the advice. And last question is just where can people find you? Where can they follow you? Any links that you want to give to the audience?
Yeah. So certainly our website fresco.vc is an easy one, and then the other place I would point people to is our Medium publication.
Oh, okay.
It's called Fusion by Fresco, and that's a relatively new effort where we have our content plus content from some external partners. And so we're pretty excited about not only being able to share what we do, but also what other people are saying. So we're certainly open to work with other people about content that they think is relevant for that.
Oh, fantastic. And that's on Medium, right?
That's on Medium, which is a new communication platform, which we've enjoyed using. And so we've been putting our publication there. It's called Fusion by Fresco.
Fusion by Fresco. And it's kind of like a startup blog or founder blog type thing?
It's both. It's not just for startups and founders. It's also for corporate innovation and basically just, as the name implies, connecting different worlds.
Right. Okay.
So I think that's still a gap in the market, which is everyone's a little bit in their own bubble, and we need to make more connections between these different bubbles.
Okay, great. Awesome. Well, thanks so much, Tytus. Thanks for your time. I appreciate it so early on a Tuesday morning, but we really enjoyed having you on the show, and I'll definitely let you know when it drops.
Thanks a lot, Jay.
Awesome. Thanks.
It was a pleasure.
Yep.
Bye.
I hope you enjoyed today's episode. All the show notes and links can be found over at jkimshow.com. Come back often and make sure you subscribe, rate, and review. Don't forget to join us next week for another exciting episode of The Jay Kim Show. I'd love to hear your comments. You can find me on Twitter at jaykimmer, JAYKIMMER. See you guys next week. This podcast is brought to you by Hack Your Fitness, the high achiever's guide to getting ripped in under 3 hours a week. If you're anything like me, you're probably working a full-time job or jobs and trying to find time to balance family life, social life, and last but not least, fitness. Look, I get it. I'm a full-time investor and entrepreneur myself, and father of two. So how am I able to stay fit year-round without spending hours and hours in the gym killing myself on the cardio machine? After struggling for the last 15 years trying every workout and diet under the sun, I finally designed a system that allows me to achieve and maintain single-digit body fat for life in under 3 hours a week. Cardio not required. Head on over to hackyour.fitness and download my free 13-page guide that teaches you the simple science behind efficient fitness and smart nutrition and gives you everything you need to know to finally take control of your life. That's hackyour.fitness.